In this video, I'm going to go over the basic structure of a commercial real estate loan. First thing I want to talk about is interest rates. In general, interest rates are going to be either at or slightly higher than what you'd find on a 30-year fixed rate. In commercial, you're probably not going to find a 2% interest rate on commercial. If you do, go ahead and do it. But generally, if today's 30-year fixed mortgage rate is 3.75, commercial may be a little bit higher, 3.85, 3.95, maybe a little bit higher than that. So it's going to be close, but it's going to be probably a little bit higher on that. What's also important to know is your interest rate is fixed for only 5 to 7 years in general. There are 10-year rates out there available or longer. They're just a little bit more difficult to find. But what that means is your interest rate will change every 5 years based on the market. And you can see one of my other previous videos that talks about how commercial interest rates are set to determine how that's the case. Now, also in a commercial loan, you have a loan term. Unlike a residential mortgage that's once you do the mortgage, after 30 years, it's paid off and you're done, you never have to touch it. 10 years is usually a loan term for commercial real estate. That means there's a balloon payment and we probably need to refinance or pay that off within the 10 years. Then there's the amortization. The amortization is how your payments are calculated, whether it's based on a 15-year, a 20-year, a 25-year, or even a 30-year based on the type of property. So with an amortization, if you have a higher amortization, you're going to have a lower payment. If you have a lower amortization, you'll have a higher payment, but your loan will be paid off faster. So just to clarify from what I'm saying here, a normal commercial loan term gives you a 5-year fixed rate that changes for the first 2 times. At 10 years, we need to refinance the loan because there's a balloon payment, but your payments are based off of 25 or 30 years based on the amortization. A question I get asked quite often is, why can't you just get 30-year fixed rates like residential? That's because here in the United States, we have Freddie Mac and Fannie Mae, which provides us the ability to give 30-year fixed rates. Now, in Canada, they do not have Fannie Mae and Freddie Mac, and their loans are fairly similar to how this commercial, as I just explained, where every 5 or 10 years, the loan needs to be reviewed by an underwriter, a new appraisal, and they want to make sure that the loan is still good.